In this video, I'm going to go over the latest housing market prediction by Australia's largest bank, Commonwealth, to see what they think is going to happen for the Australian housing market in 2020. And also they had a scenario which they said was too bad for the public's viewing. Now last year, CommBank put out a crazy housing market crash prediction that it could fall up to 32%, but they're definitely changing their tune now that there's been mass government intervention into the property market, because remember, it's not a free market, it's completely manipulated. So let's get into see what they think house prices will be for this year. If this video brings you value, please drop a like for the whole YouTube algorithm. It really helps out the channel a lot. Comment your thoughts below. Where do you think house prices will be going in 2021? And subscribe for latest property market and economic news in Australia. Alright, CBA predicts 2021 Aussie house price boom of 8%. So what do you guys think? Do you think 8% is the right number? Do you think it's going to be lower? Do you think it's going to be more? And remember, the Australian property market isn't just one market. So don't just look at this and think your area is going to go up 8%. Every state has its own market. Every capital city has its own market. And even down to the suburb level, some parts of the suburb will perform better than other parts. So Commonwealth Bank released its massive yearly profit results and made a shocking prediction about what house prices will do in 2021. Commonwealth Bank reported its profits on Wednesday, and they made a cool $5 billion in the last 6 months alone. Not too shabby. Revenues were around $12 billion, costs were a bit over $6 billion, and they paid a $1.6 billion in tax, leaving around $5 billion for shareholders. Not bad going for a pandemic. But their profits still are down around 10% compared to last year. But of course, we don't really care about the bank's profits here at the moment. We want to know what's going to happen to house prices. So CommBank forecasts what it thinks will happen in the future. It is forecasting an economic boom in asset prices with house price growth of 8% this year and stock price growth of 12%. It also expects unemployment to fall even as JobKeeper goes away. And this is what I keep saying, with what the central banks are doing by printing money and dropping interest rates, we're seeing a K-shaped recovery in the economy. The rich that own assets, they're seeing a massive increase in wealth. The billionaires have made billions, but the people on JobKeeper, JobSeeker, the people in the travel and hospitality industries, the people on lower incomes, they're not seeing any recovery at all. And unfortunately, this is the way the financial system works. The old days where you put money in a bank and earn interest of 7 to 10% in the 90s, that's gone away. That's not a wealth building strategy anymore. You have to invest for the long term, because that's what the central banks are doing. They're printing money. Retail investors are getting more savvy with YouTube now, with the information out there. They know what they do is not really for the economy. It's more for lifting asset prices and confidence. But this is all just its main scenario, which they call the central scenario. There's also a downside scenario and an upside scenario, as you'd expect. But apparently they're also quietly bracing for the worst, as the bank revealed it had also produced a severe downside scenario. They asked the bank for more details on that. Apparently it's too shocking for public consumption because they wouldn't send it to them. So what do you guys speculate what this severe downside scenario could be? Do you think their scenario of a 32% house price crash, which they put out last year, is still possible? Definitely, we're going to have to see how strong the economy is now that they're withdrawing JobSeeker, JobKeeper, the mortgage holidays are coming to an end, businesses trading while insolvent are coming to an end, the eviction moratorium is ending, and this isn't just happening in Australia, this is happening globally. So there is a great quantitative tightening starting to happen. And we've seen all the good things of all the handouts and helicopter money, but now is going to be the real test for the economy once all this stimulus gets taken away. But even the simple downside scenario makes for shocking reading. Unemployment goes up to 10.4%, disposable incomes fall by 3.6%, and house prices drop 15%. How likely do you think this is to happen? We do see that they're saying, with JobKeeper ending, unemployment won't be affected that much. But maybe what they're not factoring in is a flow-on effect. Because remember, one person's income or one person's spending is another person's income. So these people that are getting cut off JobKeeper, they're going to tighten up their wallets. They're not going to spend, and then that will go on to have a flow-on effect and affect other businesses. And in the economy, they call this the velocity of money. $1 spending could be worth 5 times in GDP. Remember, this is not their secret severe downside scenario, and this one they were happy to release. So we can see here, unemployment rate of 6.5%, house prices rise 8%. If unemployment rate goes to 10.4%, house prices will fall 15%. What happens with the economy is very important to the Commonwealth Bank because it's Australia's biggest lender. They have a lot of home loans on their books. They have a lot of business loans on their books. So they definitely have a big interest on the economy and the housing market getting back to full swing. So is everything sunny in the world of home loans? You might think so if you look at the mortgage arrears, those loans where people are behind on their repayments and mortgage in arrears, they're likely to turn into mortgage defaults, but mortgage arrears are well down. So if we look here, owner-occupiers arrears are falling, but investor home loan arrears are actually rising. And that's something that's definitely alarming. And I'm very interested to see what these arrears are going to look like once the mortgage holidays end. And it's also starting to sound a lot like the 2007 subprime loan crisis in America, when they still classed all these subprime loans as AAA rated loans and they're sold on to investors. Do you think the same thing could happen here in Australia? So arrears appear to be down, but the bank doesn't count deferrals as arrears. Remember how banks let their customers put loans on deferral? Commonwealth Bank still has $9 billion worth of loans which aren't being paid back at all. That's quite shocking, $9 billion not being paid back at all. And even though this isn't much compared to the loan book as a whole, there may be pockets or areas which have a lot more mortgages on deferral than other areas. So if you're in one of these areas, even if the Australian market recovers as a whole, you may be in a hotspot and houses prices may be more affected in that area. So that's a lot less than the peak in 2020 to be sure, but $9 billion is not a number to sneeze at, especially since almost half of them are in one geographic area, Victoria, which has had the worst of the pandemic, naturally has the highest number of mortgage arrears still in deferral, and the risk of loans going bad would seem to be worse in the southern state, which is battling fresh outbreaks of the virus even now. And that's right, this is Saturday when I'm recording this. Today is the first day of our new 5-day lockdown. Just come out of a bunch of lockdowns last year. Definitely not happy to be in another lockdown. Hopefully after these 5 days, the restrictions are lifted. We can get back to business as usual. But this is definitely going to affect confidence. Imagine if you're a business that's been battling since last year, things are just starting to pick up, and then all of a sudden you shut down again. This is something that's very devastating for small businesses. They're the ones that's going to be affected the most. The big businesses, they'll be able to soldier on. They'll be able to raise capital, sell bonds to investors to get through this. And a lot about the economy is psychology. If people think things are good, they're going to be more likely to go out there and spend and make the economy stronger. But if their confidence is all of a sudden shot, then they're going to spend less, and then that's going to have a more downward effect on the economy. So Victoria's prospects for 2021 are cloudy, but what happens in the next few months and another outbreak prior to the widespread vaccination is possible. So that's just the virus risk. There's also a risk around what happens to Australian consumers when JobSeeker supplement expires and JobSeeker is removed. The Reserve Bank says it expects incomes to fall around 3% and consumption to rise 14% in this year to June. So that's something I'm definitely watching and waiting to see, like I said, what's going to happen once this expires, because the dollar was doubled from $5.50 to $11.00, and we know those on lower incomes are more likely to spend additional income when it comes through than people on higher incomes, where they're just more likely to put it in stocks or real estate. So it says here, of course, the Commonwealth Bank is not betting the whole bank on the central scenario coming true. The reason they have a downside scenario and a severe downside scenario is they want to be ready in case of disaster. Commonwealth Bank boss Matt Comlin was careful to point out that they hope for the best but prepare for the worst. And that's exactly what I do. I prepare for the worst. That's why I put out these things, just to let people know, just to be aware, prepare just in case things do turn a little bit bad. But I also do prepare for the best and bet that eventually things will recover and invest for the long term. We could withstand a much more significant economic deterioration than we anticipated, he said on Wednesday. Still, he says it would be very helpful for all those deferred mortgages if the economy kept going well. The remaining mortgages on deferral belong disproportionately to people who have really suffered in the pandemic, like people who work in the travel or major events. And that's exactly right. People in these industries are definitely suffering. Like I said, we're seeing a K-shaped recovery where those on the lower incomes are suffering, while those that are better off, the 1%, have really never been doing better. It will be much easier for them to get their mortgage repayments back on track if the unemployment rate keeps dropping. Of course, some won't be able to get back on track and will have to sell their property. If they have to sell, it will be much better to sell into a rising market. Okay, so this is interesting. We are seeing some hints now that the banks are saying they are going to start telling some of their customers to sell if they can't get back on their feet. And I agree with him. I do hope they're selling into a rising market. We do have a rising market. Hopefully they have a fair bit of equity in their property and they can use that capital to get back on their feet in 2021. It is easy to see why the Commonwealth Bank would want to believe in their central scenario, but we know from 2020, life doesn't always turn out the way you want. And that's right, the economy and the market is so unpredictable right now, and it all depends on how the pandemic goes. So guys, what do you think about this? Do you think we're going to see some forced sales coming on in the market mid this year? Do you think the rise of 8% is accurate? Do you think that all the stimulus withdrawing is going to affect the property market? Or do you think if there's any sign of the property market going down, the government's going to jump in and give more stimulus? They're going to give 100k home builder grants. They're going to let foreign investors pay no stamp duty. Do you think they're going to open the floodgates for immigration next year to keep those property prices rising and the Reserve Bank to keep that money printing going? If this video brought you value and you haven't already, please hit that like button for the whole YouTube algorithm. It really helped out the channel a lot. If you haven't already, subscribe. I'll keep you up to date on the latest that's going on in the Australian property market and economy. And of course, I'll see you in the next video.